Welcome back to our channel, where we dive deep into the world of finance and investing. Today, we're uncovering a game-changing strategy that can take your investing to the next level. It's called second layer thinking, and it's the secret behind some of the most successful investors in the world. Whether you're new to investing or have been in the game for years, this concept will help you sharpen your decision-making skills and stand out in a crowded market. Let's start with the basics. What exactly is second layer thinking? Imagine you're at a horse race. The first layer of thinking is simple: which horse will win? Most people stop there, but the second layer goes deeper. It asks, what does everyone else think, and how can I think differently? It's about moving beyond the obvious and seeing what others might miss. This type of thinking isn't just about being smart, it's about being different. In investing, it's not enough to follow the crowd. The real winners are those who can anticipate the next move, not just react to the current trend. So, why is this important? The majority of investors, especially those new to the market, tend to fall into the trap of herd mentality. They follow what others are doing because it feels safe. But here's the catch: when everyone is thinking the same way, that thinking is already reflected in the stock prices. This means there's little room for profit unless you think differently. That's where second layer thinking comes into play. It pushes you to consider factors that others might overlook, giving you an edge in the market. One of the key lessons in second layer thinking is the importance of risk management. Successful investors don't just focus on how much they can gain. They also think critically about what they might lose. This approach was famously advocated by Benjamin Graham, who emphasized the need to avoid losses more than seeking profits. The idea is simple: by protecting yourself from significant losses, you're setting the foundation for long-term success. Second layer thinking encourages you to weigh risks carefully, considering not just the upside but also the potential downsides of any investment. Now, let's talk about how you can apply this in real-life scenarios. Imagine you're looking at a company that's popular in the market. The first layer of thinking might tell you to buy its stock because everyone else is. But second layer thinking asks you to dig deeper. Is this company really as strong as it seems? What are the risks that others are ignoring? Are there better opportunities out there that aren't getting as much attention? By asking these questions, you're already thinking differently from the crowd, and that's where your advantage lies. A great example of second layer thinking in action comes from the legendary investor Howard Marks, who popularized this concept. Marks often looks for opportunities where others see only risk. During the financial crisis, while many investors were panicking and selling off assets, Marks was buying. He saw value where others saw danger. This doesn't mean you should always go against the crowd, but it does mean you should think critically about why the crowd is doing what it's doing and whether there's a smarter, less obvious move to make. Another crucial aspect of second layer thinking is understanding the psychology of the market. Markets are driven by emotions: fear, greed, excitement, and these emotions can create opportunities for those who are thinking one step ahead. If you can anticipate how emotions might cause the market to overreact, you can position yourself to take advantage of these swings. This requires not just analytical skills, but also a deep understanding of human behavior. It's about being patient and waiting for the right moment to act, rather than jumping on every trend that comes along. Developing second layer thinking takes time and practice. It's not something you'll master overnight, but the more you challenge yourself to think differently, the better you'll become at spotting opportunities that others miss. Start by questioning your assumptions. When you hear about a sure thing investment, ask yourself, what am I missing? What might others be overlooking? Over time, this mindset will become second nature, and you'll find yourself making smarter, more informed investment decisions. To wrap things up, remember that second layer thinking is about more than just being contrarian. It's about being thoughtful, analytical, and above all, different. In the world of investing, where everyone is looking for an edge, thinking a little deeper and a little differently can make all the difference. So the next time you're faced with an investment decision, don't just ask, what should I do? Ask, what is everyone else doing? And how can I see things differently? Thank you for watching today's video. If you found this content valuable, make sure to hit the like button and share it with others who might benefit. Don't forget to subscribe to our channel for more insights and tips on investing. We'd love to hear your thoughts, so leave a comment below on how you plan to apply second layer thinking in your investment strategy. And as always, stay tuned for our next video, where we'll continue to explore the world of finance and investing.